bring inflation down. You know, again, their SEP projections suggest that they still think they can to get a soft landing, but I think that maybe there's a plausible path to that, but that plausibility is declining, you know, as we get more onerous news on the inflation side.
Tiffany Wilding, just fantastic, brilliant. As always, it's good to catch up. It's been too long. Don't be a stranger. Tiffany Wilding there of PIMCO. From the West Coast, waking up super early and looking ahead to the Fed. I'll repeat what Nick Bannonbrook of Wells Fargo said earlier this week to Lisa and I on Bloomberg Surveillance. Like landing a jumbo jet on a picnic blanket. That's how tough this is going to be in the minds of so many people. Coming up, markets on edge with investors gearing up for a Fed rate hike.
Corporate profit margins are still pretty good, and they put in place 2 years of ultra-low-cost financing in 2020 and 2021, and you've got a tight labor market. I think the Fed's watching all of this, and I think it's going to cause them to have to go further than even we think in hiking rates to really lean in to this kind of growth.
The conversation continues. Up next.
We're saying wait until we get into a recession. A reasonable spread level for recession is 750 basis points. We think at a minimum, the Treasury curve will be at about 4.5%. That's a 12% yield with credit spread and where the Treasury curve is. That's substantially above the 8.5% now. So there's a lot of impatience in the market to take advantage of the repricing. We're not even in the recession yet. Let's wait till we get there.
Okay, pause. Those calls from Bob Michael at JP Morgan Asset Management. He's talking about the prospect of 5% on Fed funds, 4.5% on treasuries, 750 on high yield spreads. Right now, spreads are 483 at the close yesterday. So we've got some work to do here, a lot of work, 267 basis points worth of work. And he's effectively saying, wait, it's too premature to jump in, be patient. We've got work to do. Wait for the recession is the call now from Bob Michael. And I can tell you, that's a change of call from where Bob Michael was only just 3 months ago. About 17 minutes into this one, equities up 0.6% on the S&P, and the Nasdaq up 0.4%. Big Wednesday for markets. Bank CEOs testifying on Capitol Hill. The President speaking at the UN General Assembly, both within the next hour, and later a Fed rate decision and Chairman Powell news conference. Kaylee has more for you. Hey, Kaylee.
Hey, John. It's like we took everyone that financial markets will drop everything and listen to and threw them all into the same day, or at least us here in financial media. The President of the United States, the executives from these big banks, and the Chairman of the Federal Reserve. As you said, first up are the banks on Capitol Hill. What do they have to say about the health of the economy and the consumer? That really is going to be the language that the markets grip to. Then President Biden will talk geopolitics shortly thereafter. And then, of course, we're going to get not just a rate decision, but the updated dot plot and summary of economic projections at 2 p.m. followed by Chairman Powell at the podium. So all of that would have been more than enough excitement for a Wednesday, but Vladimir Putin this morning decided to throw a little bit of geopolitical risk into the cocktail with his remarks on the mobilization of reservists, talking about using any means necessary in Ukraine, which raises the threat at least of potentially nuclear weapons, or the question of it. All of that being market moving, giving a lift to commodities, giving a lift to some of those defense stocks here in the U.S., and also a little bit of a haven bid coming into treasuries. But of course, it's usually selling treasuries these days, not buying them. We have seen monster moves to the upside in the treasury market in anticipation of an aggressive Federal Reserve. Just take a look at the short end. The 2-year yield up 323 basis points year to date, and more than 100 basis points of that has come just since the start of August. We are very, very close to 4%, meaning the curve is more inverted, negative 40 basis points at this point between 2s and 10s. That inverted yield curve, what it signals about the health of the economy, to bring it back to the banks, probably something they're going to be talking about today, John.
Kelly, nice. Thank you. On the yield curve as well, I mentioned it earlier if you missed it. TD's pre-MISRA coming up a little bit later. Absolutely fantastic on that. Kelly, thank you. And to Kelly's point, if you have a day where the defense names and energy is rallying at the same time, often something good isn't happening somewhere, and I think we can say that's true of today. A little bit later, big bank CEOs testifying before Congress, executives preparing to deliver lawmakers a warning about the economic risks of surging inflation. Shonali Basak, of course, on top of this story. Hey, Shonali.
John, we already have some hints of what they're going to say because we do have the testimonies, and Citigroup's Jane Fraser is saying that the economic outlook is daunting despite getting over the worst of COVID. You also have heard from Jamie Dimon, we talked about it yesterday, that idea that this is a tale of two cities, and he's also worried about more in terms of capital requirements for the banks coming at a time where the economy is tightening. But let's talk a little bit about that tightening, because even with that tightening and lawmakers really worried about the cost of borrowing rising for consumers, for homeowners, for small businesses, at the very same time you really don't have those savings rates rising very meaningfully along the back of higher interest rates. So if you take a look at what the FDIC tells you, you're getting 17 basis points, and if you're getting a 60-month CD, you are still getting less than 1 percentage point back. So again, banks are flush with cash. They're sitting on more than $6.3 trillion worth of excess liquidity, and there's still a lot of worries about, how they start to boost lending at a time when the economy gets tougher and not really raise savings rates at the same time. They will face questions about what they are doing right now for society as the whole economic outlook starts to change.
Shonali, where's Mr. Solomon?
It's a good question, because on one hand, we're also going to be looking for a question about a lot of social issues as the banks face. There's not a lot of investment banking executives there. There's no James Gorman. There's no David Solomon. You do have the big consumer banks, which shows you that at least for this week, what they're really concerned is about the bank branches, the networks across America, and getting that money into the hands of Americans.
I ask this because there are some concerns about his consumer operation, right?
Yeah, it's still so small compared to the rest of them, and I have to say something interesting. If you look at what's happening at the other banks, banks and what they're being asked of, the prepared testimonies. They're also commenting on social issues that still apply to Morgan Stanley and Goldman Sachs, which is that issue of diversity and what they're doing for minority communities across the country. So again, Morgan Stanley and Goldman Sachs both not there on the Hill today and tomorrow, but to your point, will face questions moving forward from the Federal Reserve and other regulators.
Shinali loves this stuff.
I do.
If this was side by side with Chairman Powell, I'd be watching Chairman Powell, and Shinali would not even be looking over to see what was happening. I know that for a fact. Shinali, thank you. Looking forward to it later on the breakdown tomorrow, of course, on the latest with the CEO bank hearings, the bank CEO hearings rather, a little bit later this morning. Let's get you some sector price action. Stocks are up 0.6 of 1% with a breakdown. Here's Abby.
John, we are looking at a gain for the S&P 500, the other indexes right now. It's coming on very weak volume, though, 20% below the 20-day average. So stocks, investors still treading water ahead of the big decision. Now, the top sectors, some of them are up about 1%, industrials, consumer staples, and utilities. The latter two, they, of course, are high dividend yielding sectors and stocks. So the fact that you have yields down a little bit today makes those dividends look a little bit more attractive. Now, let's take a look at the sector breakdown, though. Since the last Fed meeting back in July, most sectors are down. 8 are down. The two sectors higher, not surprisingly, energy and then utilities. That's really interesting because, of course, yields have just blasted higher, which would make those dividends look less appealing, but that, of course, as you know, John, is a defensive sector, so it's doing well. That speaks to the sign of the times. Tech and communication services, mega cap tech, not so much as those yields do climb, John.
Abby, thank you. Coming up next on this program, your trading diary from New York. This is Bloomberg.
I believe they'll do 75, but I cannot fully rule out 100. I can rule out 50. There is no justification for dialing back at this point. But I really think the highest probability is 75.
That's one to chew over. The former Atlanta Fed President Dennis Lockhart there in the last 24 hours. Equities up 0.6 of 1% on the S&P and the Nasdaq up 1/3 of 1%. That's the price action. Here's your trading diary. What you need to be watching. Coming up, existing home sales and US bank executives testifying on Capitol Hill. That's up at the top of the hour. President Biden addressing the UN General Assembly at 10:30 Eastern. We get a rate decision at 2 p.m. Chairman Powell news conference 30 minutes later, followed by a rate decision from the BOJ and BOE on Thursday, and closing out the week with US PMIs on Friday. Looking forward to the Fed special a little bit later with the surveillance team. The Fed decides. We'll kick things off at 1:30 p.m. Eastern time. You will hear from the chairman. You'll hear from the former vice chair, Richard Clarida, immediately after the decision. From New York, this is Bloomberg.
This is Bloomberg. From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day, Wednesday, September 21st. Here are the top market stories that we're following for you at this hour. Closing shorts into the Fed. You got Wall Street exiting short positions, heading into cash into the Fed decision as history points to a stock bounce on Fed days this year. And mega banks in the hot seat. Jamie Dimon, Jane Fraser, Brian Moynihan, and their peers testified before the House Financial Services Committee. We're going to take you live to Capitol Hill. And Putin's partial mobilization. The Russian leader calls up to 300,000 reservists in an escalation of fighting with Ukraine and says it's not a bluff. President Biden set to speak at the UN in the next hour. From New York, I'm Alex Steele with my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. If you're a trader, I feel like you do your positions and you press snooze until 2 o'clock. If you're a long-term investor, who knows what you're going to do at 2 o'clock?
Absolutely. If you're a long-term investor, in theory, maybe this shouldn't change the narrative for you, but it could. Theory, practice. Alex, I think a lot of traders probably will have maybe got themselves a little bit more neutral going into this. There is still significant risk around this event, though increasingly we're being pointed towards a 75 basis point hike from the Federal Reserve, but there's a lot going on around that decision, that press conference. The totality of the data do matter. Actually, we're seeing some stabilization, Alex, in existing home sales. 4.8 million, that's basically flat last time round. The prior number, the July number, revised a little bit higher as well. That means the month-on-month number, negative 0.4%. The market was looking for negative 2.3. So the data maybe a little bit more positive, which is surprising given the fact that we are seeing mortgage rates, as you well know, Alex Steele, are going higher.
Yeah, he makes fun of me because I locked in my 30-year at 2.75%.
I'm not making fun of you.
And we like to just say that anytime that we can.
Yeah, I am in awe of your market timing prowess.
It's true. I do have good market timing with mortgage rates. But anyway, you know, this echoes what we heard yesterday from Evercore ISI with Stephen Kim on, that basically that housing data is actually strong. There's not the supply, and that's going to underpin the housing market.
Yep, it's going to be interesting to see ultimately what unemployment could do to the housing market. I think maybe that's the kind of the second factor that we may be looking out for. As the Fed talks about maybe having to inflict some pain on this economy. The Fed decision, of course, out at 2 p.m. The data, what are the totality of the data, Alex, telling us about where we are and where we're going and what the Fed ultimately is going to do here? Well, let's try and answer that question. Bloomberg's international economics and policy correspondent, Mike McKee, joins us now. Mike, the home data looks pretty solid. Across the board, the existing home sales numbers look pretty good. But if you look at the totality of the data, and that apparently is where the Fed is focused, what is it telling us going into this decision?
Well, that's a problem for the Fed because they are making a decision based on what they know now, which is based on numbers that are old, that are looking backwards. But they're trying to figure out where the economy is going, which is based on the lags in monetary policy. When do they finally affect the economy? So we're hoping we get today some data or some numbers that tell us what they're thinking this all means. Obviously, the 75 basis points is going to be the quick headline, but markets have pretty much priced that in. What they're going to want to see is the dot plot and the summary of economic projections, especially unemployment, because that'll give us an idea of how high they think it has to go before it's too far, before the economy starts to go into recession. Expect those numbers to be revised up. And then how slowly does inflation come down? The guess is now that it's going to come down more slowly than it had in the past. Dot plot obviously is the main event for people in the markets because they'll see how far they raise their dots in terms of where the economy has to go and how long they keep it there.
Hey, Mike, Shonali and John were joking in the last hour about if there was Powell and the bank hearing side by side, John would choose Powell and Shonali would definitely choose the bankers, not even look at the Fed. Is there an actual overlap, though, that we need to focus on into the Fed meeting?
There's a bit of an overlap, and it's kind of funny because the members of Congress aren't going to do anything about the bankers today. It's the bank regulators who really matter, especially to people like Jamie Dimon, who's already released his testimony saying that they don't like the capital standards. While there's a new head of bank supervision at the Fed, Michael Barr, and he's talked about getting tougher on the banks, the big banks, in terms of capital requirements. There are also questions about various different safety set-asides for the banks, and so there's going to be a lot happening over the next year or so at the Fed and other bank regulators that will affect these bankers. So after they leave Capitol Hill, they might want to stop on down at 20th and C Street to see some people.
Yeah, exactly. I'm sure they won't want to, but all right, Mike, thanks a lot. Really appreciate it. Busy day for you. Bloomberg's Michael McKee. We appreciate it. So investors really preparing for a hawkish Fed and for it to hold rates higher for longer. Here's what some of our guests said ahead of that FOMC meeting.
The market was not really buying into the Fed's resolve to hike rates enough to slow the economy and getting inflation down.
Chairman Powell has got one mission, that's to deal with inflation.
I think that they're going to keep their cards close to their vest.
I think the message from the Fed is policy rates and real rates, yes, those are the things they need to get up, but they have to keep them there, which is kind of the message.
We're going to hear a hawkish message today. It's probably going to drive the dollar further.
The market is picked over because this is where we are in the evolution of this bear market. When the water rises, you go to the higher part of the mountain. And so everybody's kind of crammed into the same stuff.
For the first time in many, many years, cash is actually giving you a bit of a return. We've actually taken that cash position to about 10%. We're not just taking it out of the equities. We're actually taking out of bonds as well.
There's really been nowhere to hide this year in fixed income.
Risk assets do not love higher yields that are not supported by strong growth.
I wouldn't be surprised if today we get some relief, quite frankly, led by the bond market after the Fed does their thing. Maybe stocks can rally one more time, but the end game for us is all about the earnings and the growth now.
All right, joining us now for her view is Maria Vasilou, Co-Chief Investment Officer of Multi-Asset Solutions over at Goldman Sachs Asset Management, which manages over $200 billion. Maria, such a pleasure. Thank you for joining us.
Thank you for having me, Alex.
What do you think is going to happen at 2?
Well, we're going to get, this is a Fed that doesn't like to surprise the market, so I expect that they will go with 75 basis points hike, but the important message will be the forward guidance. What are they planning to do going forward?
So you have multi-asset strategy, right? You're not going to be trading the announcement. So what do? Do you have to sort of be in cash into this announcement to then take advantage of whatever those long-term summary of economic projections are?
Well, we certainly have been very careful in managing our risk into all this event risk, and the important thing at this point is to have dry powder to take advantage of opportunities that will present themselves going forward. We do expect that risky assets may have another leg down, and what we're doing is prepare for the opportunities that will come to scoop up undervalued assets.
How big do you think those opportunities will be, Maria? Good morning, it's Guy.
Good morning, Guy. It very much depends on what the terminal rate of interest rates is going to be. As we see, the market is pricing further hikes for November and December and into next year, and then cuts. If that happens, that means that effectively the Fed will have over-tightened, and then they need to correct course. That increases the probability of a more severe recession, and therefore bigger dislocations in the market.
Have you ever seen, it feels the way we talk about this, that it's very binary. Either the Fed keeps going and leaves rates high for long, or we're going to have to cut at some point next year. Is it actually that binary where you sit? It feels binary to us.
Well, we have to also keep in mind that it's not only the Fed tightening, it's also global central banks tightening. So this is a time where global economic growth is slowing down, and all central banks are raising interest rates at the same time, while some of them are also doing QT. So we have a massive withdrawal of liquidity from the markets, and frankly, I don't think that anybody really knows what the final effect of that is going to be. This is another unprecedented situation for the Fed, and so that makes the probability of a potential policy error much greater.
Do you think we understand yet? You're talking about the fact that we don't really have a framework in which to think about QT. How are therefore you trying to deal with it when it comes to managing portfolios? As you say, there is going to be a liquidity squeeze.
Yes.
How do you calculate, how do you work out how to position around that?
Well, I think in this kind of situations, lowering risk exposures and keeping some dry powder makes a lot of sense. We have reduced our exposures to risky assets. We think that the dollar will continue to strengthen going forward. We also think that at some point fixed income will show value, especially in the 10-year sector. Because as rates continue to increase, we think that we're going to see bigger inversions in the curve. So it's a matter of being opportunistic, being nimble, but also trying not to really call the bottom here or trade every day, but really be prudent in the risk management of the portfolios.
How long do you think you're going to have to manage this risk? And I guess that's my way of asking, like, how long this environment lasts. Like, by 2024, is it going to be like, great, let's go buy growth? Are we back to that story? Or do you think that this is like a regime change now?
It is a regime change in many ways. First of all, we're seeing this massive withdrawal of liquidity. At the same time, we are going through a deglobalization process, which actually is inflationary. Because if you look at the past, the reason the central banks couldn't get to 2% inflation was because we were living through a world of unfettered free trade and globalization. Now some of these things are reversing, first with a pandemic and now with the geopolitical issues in Europe. So we're getting much more segmentation in the markets, both in goods markets and capital markets. So what I will be looking for is really inflation peaking and coming down, central banks and especially the Fed getting to a point where they have come to peak interest rates and they're pausing there, and that's I think is where the value will be more obvious to see and potentially take advantage of it.
Where in all of that is the Fed put? Is there a Fed put? If we see significant damage to assets, does the Fed change tactics, do you think? And is that the ultimate clue as to when you want to reinvest?
Right now, the Fed is singularly focused on inflation, and that's important because it has to effectively choose between short-term pain or long-term pain. So they're focused on short-term pain, really rooting out inflation, hitting growth now in order to be able to re-anchor inflation expectations so the economy has a chance to grow at healthy levels going forward. Once they get to a point where inflation gets back to a manageable level, then they will switch to focusing on the dual mandate. And of course, to what extent they will put the emphasis on the dual mandate depends very much on where unemployment is going to go.
We really enjoyed spending this time with you, Maria. Thank you so much. I do not envy your job right now, having to figure this out and make people money. Maria Vassalou of Goldman Sachs Asset Management. Thank you so very much. All right, coming up, you are looking at a live shot. We got the House Financial Services Committee hearing with bank CEOs coming underway. You're looking at the ranking member, Patrick McHenry of North Carolina, speaking there right now. Also coming up, President Biden about to speak at the UN in about half an hour's time, and this comes as Russian President Vladimir Putin has now called up 300,000 reservists in a televised national address. More on that next. This is Bloomberg.
All eyes are on the Fed.
The Fed has more work to do.
75 basis points seems to be baked in.
How quickly do they get to the terminal rate?
How long do they hold them there?
Chairman Powell's going to have to read the same speech twice.
Trust Bloomberg for the fastest coverage and exclusive analysis.
Is the consumer buoyant?
The dollar is a great place to hide.
The U.S. are going to overdo it. Investors just have to hold on to their hats.
With special commentary from former Fed Vice Chair Richard Clarida. Bloomberg Surveillance. The Fed decides. Today on Bloomberg, your global business authority.
I will be talking about necessary, urgent steps to protect the sovereignty, security, and territorial integrity of Russia, about supporting the aspirations and will of our compatriots to define their future on their own, and about the aggressive policy of some Western elites that try by all means to preserve their dominance, and therefore are trying to block, suppress any sovereign independent development centers in order to further crudely impose their will on other countries and to install their pseudo-values. The goal of this West is to weaken, divide, and ultimately destroy our country.
That was Russian President Vladimir Putin speaking in a televised national address earlier today. President Biden is also due to address the United Nations General Assembly shortly, where he is expected to comment on the Ukraine war. Anne-Marie Hordern joins us now for more at the UN headquarters. Anne-Marie, it was an explosive televised address by Putin yesterday. What's the reaction there today?
Well, what you're hearing is condemnation from a number of leaders: Olaf Scholz, Emmanuel Macron of France, NATO's Secretary General Jens Stoltenberg, and then, of course, we're going to hear from the President of the United States. And we've already heard from the spokesperson for the National Security Council. This is John Kirby on Good Morning America this morning, talking about consequences that there would be, similar to what the president said in that 60-minute sit-down, if President Putin were to use nuclear weapons, which is what he was flirting with and when he was threatening with in yesterday's evening address overnight from Russia. What the president is going to say today, and really what on the heels of what's happening in Ukraine, the sham referendum, the talk of nuclear weapons, the president is also, what we've learned, and this is coming from reporting by Politico, is that there's actually last-minute rewrites of his speech. So you're going to hear him directly respond to what President Putin is saying, and it is going to be, I imagine, a very fierce and direct condemnation.
Okay. Is this deterrence, Anne-Marie? Is this, we will respond, not the Ukrainians will respond and we will provide them with weapons, but we will respond?
Well, the president's not going to say what they would do, but they continuously say the United States' position is, quote unquote, there will be consequences. And this is something that they've said they've warned Russia about. So we have to see what kind of language he uses. It's a great question, Guy. I think already they are talking about sending more weapons and ammunition to Ukraine. So that's already part of the plan. But when it comes to the nuclear side of this, and they talk about, quote, consequences, we don't know yet what they are. And they will not tell you yet what they are. But you can imagine there is going to be a pretty direct threat back to Putin today from the President of the United States.
Anne-Marie, I feel like just a few days ago, the conversation was, are we looking at back-channel conversations from European countries, Ukraine and Russia, etc.? Is that conversation completely dead at this point?
Well, the idea that there would be a peace negotiation or any type of peace talks, that is completely dead, given what we are seeing now in eastern Ukraine. That fell dead when Putin announced these quote-unquote referendums in Kherson, in Luhansk, Donetsk, and Zaporizhia. And now the idea that he is calling up 300,000 reservists and that he is talking about the use of nuclear weapons, saying to the West, we have nuclear weapons and you should be careful where the wind blows. And he says, I am not bluffing. There is no way you are going to get a peace negotiation. But when it comes to European outreach, we have seen European leaders continue to speak to President Putin, most notably Francis Macron.
In terms of how symmetrical the threat could be, could we be seeing nuclear weapons, for instance, being put into Central and Eastern Europe. I'm just wondering how, if you think about the Cold War and Cold War doctrine, mutually assured destruction, there was a symmetry to the threat. Are we getting towards that kind of territory, Anne-Marie?
Well, we heard from John Kirby this morning that they don't see any reason right now, the United States, to change their force posture at this moment. One individual very close to and understands the Russian apparatus once said to me that it would be incredibly difficult for Putin to use nuclear weapons because in that moment, he potentially could be denied by his own military. If he gives the order, but his military does not want to do that, then potentially that could be what you would see as potentially the end of him. So there is a big question of whether or not, and many just see this as Putin is feeling defeated from this successful offensive, counteroffensive we saw from Ukraine in the Kharkiv area, that he is just using this really to just distract and to make threats that he cannot actually, or will not actually see the light of day.
Yep. Very difficult to understand what is happening here. Thank you for the analysis. Bloomberg's Anne-Marie Hordern joining us from the UN General Assembly. A lot of things happening at the same time. We are waiting President Biden's speech at the UN General Assembly. We've also got a live shot coming to us from the House Financial Services Committee. Chair Maxine Waters just introducing the CEOs. We'll be back with this story very shortly, gives you analysis on what is happening here. What are the things that you want to be listening out for? That's next. This is Bloomberg.
Focused on traditional banking activities. We've essentially been in the same business for 170 years, which is when we were founded. Our priority's always been to help customers save, borrow,
So, CEOs of the largest U.S. consumer-facing banks on Capitol Hill today. They're there tomorrow as well. PNC CEO William Damchak speaking now. Has just been introduced by Chair Maxine Waters. Bloomberg's Wall Street reporter Sonali Basak joins us now. Sonali, lay out the ground in front of us. What are we expecting today?
Yeah, listen, the bank CEOs are already talking about what they've done in the last couple of years to serve American consumers, including reducing some overdraft fees at a lot of these firms, including reaching more minority communities. But I have to say, Guy, what was the most heated part of this was the opening, was Maxine Waters. It was Congressman McHenry really disputing on the purpose of this hearing. You have Patrick McHenry talking about the focus on woke policy rather than economic policy and the concern that this is really posturing for the midterms. And I think that's a really key issue here as we continue to watch these hearings. What social concerns come up and how these lawmakers dispute among those social concerns and the role those banks play for everything from guns to climate. So you're looking at Maxine Waters, on the other hand, speaking of the worry about banking deserts and the impact of mergers contributing to a decline in the availability of banking services. You have Congressman Perlmutter talking about consumers turning to cryptocurrencies due to lack of trust in the financial system. So a lot of rhetoric here. Remember, these hearings really started only a couple of years ago. This was not something that was regular until then. And the question then becomes, what will the face of financial regulation look like as we head out of the midterms based on what happens today?
What are the CEOs most scared of?
There's a few things, I think. If you're one of the regional banks, you're really worried about that concern over banking mergers, because remember, some of these firms have been either considering mergers to expand, to gain scale, to serve these communities. You have them talking about access to financial services digitally, because many of these firms have also reduced their banking footprint. But again, remember, when it comes to climate and guns, they are torn across state lines in terms of how to serve constituents here. So what are the rules? I think that's what it comes down to at the end of the day. Remember, there's a bigger issue at play here, and that is those rising interest rates. You have a lot of lawmakers. There's one thing they have in agreement, that worry about affordable credit, that worry about high inflation. And so there will be some discussion here. You've seen it in the testimonies about raging inflation, and again, what that means politically as well. You did have Patrick McHenry use some very strong language here, saying the Democrats have poured jet fuel on an economic dumpster fire. So a lot of very strong language already coming out of a hearing that's not even 20 minutes or 30 minutes through.
Hey, Sonali, hang tight here. Jamie Dimon is preparing to read his testimony now. Let's go right to that.
The opportunity to talk about J.P. Morgan Chase, the role of America's largest banks as a force for good for the country, its citizens, and the global economy. We live in the greatest country in the world, predicated on foundational beliefs in freedom of speech, freedom of religion, freedom of enterprise, the sanctity of the individual, and the promise of equality and opportunity for all. These core values are the fabric that bind us as Americans. We're the best of what shines through, especially in times of adversity. This system has created what is still the most prosperous and innovative economy the world has ever seen, and one that nurtures vibrant businesses, large and small, and a welcoming environment for innovation, science, and technology. My enduring faith in the strength of the country remains as strong as ever. The free flow of credit and investments is key to our nation's global competitiveness. Free enterprise is the flywheel of the economy as capital seeks out investments, individuals, and ideas that drive growth and innovation. As free enterprise celebrates and is inseparable from human freedom and innovation, which ultimately are the stimulus for human progress. The secret sauce of free enterprise is not only the free movement of capital, but more importantly, the value of knowledge and free people exercising their rights. What this country needs most is free enterprise, extraordinarily competent government and policies, and more civic-minded companies and citizens. The work we do at J.P. Morgan Chase matters in good times, but particularly more in tough times. We provide critical financing to nearly every sector, including manufacturing, service, energy, real estate, and transportation. Importantly, we finance federal, state, and local governments, schools, bridges, hospitals, and universities, and transit. We have long championed the essential role of banking in a community, its potential for bringing people together, for enabling companies and individuals to reach for their dreams, and for being a source of strength in difficult times. We finance Americans' ambitions with loans for homes, autos, and growing small businesses, and we provide valuable products and services to more than half of American households. We know that our business is only as strong as our communities, so we are focused in lifting up traditionally underserved communities by increasing home ownership, expanding affordable rental housing, and growing small businesses. The last few volatile years have brought stress and disruption to so many as the world grapples with war in Ukraine, economic volatility and inflation, energy insecurity and climate change, and a pandemic. It has also shown what great companies with the size and scale of J.P. Morgan Chase can do as a source of strength to the economy. Because we have a strong and healthy company, we consistently serve and finance American households and businesses while building our communities and protecting America and the American economy. We are all here guardians of the financial system, We support our government and national security efforts to combat financial crimes, and we carry out complex sanctions. Each year, we proactively identify nation-state and cyber-criminal threats and work closely with financial services and energy industry and with the United States government to help protect critical infrastructure. And we fuel good American jobs. The businesses we all finance collectively employ hundreds of millions of Americans, and as a large employer ourselves, we employ people in every state in the country with starting wages that far exceed any government minimum wage, plus full benefits, retirement, job training, and career growth opportunities. I want to close by thanking the more than 200,000 employees of J.P. Morgan Chase. I would like the public to know how proud I am of these people who work in every state in the country. You all work tirelessly for our customers with a singular focus on doing the right thing. You work on behalf of our shareholders, real people and communities, including teachers, law enforcement, healthcare workers, and the people saving for retirement. Many of you have faced personal challenges throughout the pandemic, whether it's your own health or the health of a loved one, when managing your children's education and child care needs. At the same time, our work has never been more important or more difficult in the last several years. You continue to persevere with grace and a fortitude that makes me proud. I've been particularly moved by our essential worker population, the tens of thousands of you who continue to come to work during the height of the pandemic to serve our customers when they needed you the most. You have my deep gratitude. And for all J.P. Morgan Chase employees who perform your jobs with integrity and excellence every day, you embody the best of American values and make your country proud. Thank you, members of the committee, for the work you do for our country. I look forward to working with all of you to help solve the challenges facing our country and to help grow and safeguard this great country. Thank you.
Thank you, Mr. Diamond. Next, we will go to Ms. Frazier. You are now recognized for 5 minutes to present your oral testimony.
Thank you very much indeed, Chairwoman Waters, Ranking Member McHenry, and members of the committee. Good morning, and thank you for the opportunity to represent Citigroup today. When a similar group convened with this committee last year, we shared how our banks supported the economy during the global pandemic. Today, while the worst of COVID may be behind us, the economic challenges we are facing are no less daunting. The reforms you put in place and the work we've done since the financial crisis to strengthen our bank's financial foundation have enabled us to continue to serve as a source of stability. While today I am a proud American citizen, as someone who grew up in the UK, I can attest that the banking system and the capital markets in the States are the envy of others. Our financial institutions and our financial markets, they're essential to American competitiveness abroad, and they're a reason why the US is the top destination for foreign investment. As living expenses for Americans increase and concerns about the economy grow, we remain very focused on our role as a bank in job and in wealth creation. Through Citi's extensive global network and footprint, we partner with the most iconic American businesses as well as the federal government to help them navigate the global economy. We've been supporting our clients as they build resiliency, reconfigure supply chains, and adapt to inflationary pressures. And we help these institutions invest in projects that put them in a position to succeed in the 21st century. And it's these investments that put a lot of people to work in the US. The private sector clients we serve are where millions of Americans proudly earn their living. And those clients rely on vendors and suppliers that in turn employ millions here at home. At Citi, we employ 70,000 people here in the US, working in cities across the country, such as Jacksonville, St. Louis, and Los Angeles. The work we do with our public sector partners is a prime example of how we put our balance sheet to work to benefit local communities. In 2021, we partnered with state and local governments to catalyze more than $27 billion in infrastructure investment, such as schools, hospitals, and roads. And many of these large projects, they just wouldn't have been possible without a bank of Citi's scale to back them. We financed more than $5.6 billion in affordable housing projects, last year in communities across 32 different states, from California to Ohio to New York. And this total made us the #1 affordable housing lender in the US for the 12th year in a row. Breaking down the barriers to banking is also a top priority for us. In fact, this past summer, we became the first of the largest US banks to completely eliminate overdraft fees and returned item fees for our customers. We have been a leading proponent of pay equity. Earlier this year, we launched a first of its kind diverse financial institutions group to lead our engagement with minority depository institutions and diverse broker-dealers and asset managers. And this group is focused on helping these diverse institutions scale and expand into new markets. And it includes a groundbreaking rotational program that embeds city executives within MDIs for up to a year. So bottom line, my city colleagues and I understand and embrace the responsibilities that banks play in advancing economic empowerment and mobility. I hope my pride in Citi's story has come through, but I also want to be clear about recognizing the need to continue improving as we strive to build an even safer and sounder bank for the future. Thank you for your opportunity to speak with you about the work we're doing to support American consumers and businesses, and I look forward to your questions later on today. Thank you very much.
Thank you very much, Ms. Frazier. Next, we will go to Mr. Monahan. You are now recognized for 5 minutes to present your oral testimony.
Thank you, Chairwoman Waters, Ranking Member McHenry, and distinguished members of the committee. Good morning to all of you. It's an honor to be here to represent my 210,000 plus teammates at Bank of America and to talk to you about how we deliver responsible growth. This is how we run our company. It's the same thing I told you last year and the year before every time we've done these hearings. We deliver for our clients, for our teammates, for our communities, and for our shareholders. We believe in delivering both profits and purpose. That includes being a great place to work, which is a core tenet of responsible growth. We invest heavily in our teammates and their families. This year we raised our U.S. minimum hourly wage to $22 and are on track to increasing to $25 by 2025. We also made an across-the-board pay adjustment for all our U.S. employees mid-year in the late spring that are earned under $100,000 to increase their wages by 3 to 7% based on years of service. This is above and beyond any BAU pay review cycle. For the 5th time this year, we delivered special compensation awards to our teammates. This year, $1 billion over and above other compensation than 97% of employees. We again did not raise medical premiums for teammates that earn under $50,000, the 12th year in a row we've done that. Our global workforce is 50% women and 49% of our U.S. teammates are people of color. Our management team is 55% diverse, including 32% women. Our board is 53% diverse, including 33% women. We also continue to help our clients manage their financial lives. Over the past year alone, our lending to individuals and families grew by 9%, and our loans to small businesses grew by 8%. We're the top small business lender with $22 billion in outstanding small business loans today. Our brand and customer scores are in the best sustained shape we've ever seen. We support our clients with $1 trillion in loans to help them live their financial lives. We hold $1.9 trillion of their deposits to help them also. 95% of our PPP loans have been paid off or forgiven. We continue to expand our nationwide network of financial centers and our industry-leading and award-winning digital capabilities. Through both, we deliver transparent, easy-to-use products and services to help our clients save, spend, and borrow. As an example, beginning in 2009, we began to take steps to empower our clients to reduce overdraft usage. We first eliminated overdraft fees for clients when using debit cards at point of sale and have not allowed opt-in for a dozen years. We also have created no overdraft fee accounts, now over 4 million in our client base. We've since eliminated fees for non-sufficient funds on our consumer deposit accounts. We reduced overdraft fees from $35 to $10 per occurrence, and we removed the ability to overdraft an ATM. You can see that in the second quarter call reports that show our non-sufficient funds and overdraft fees are down 66% from last year's second quarter. Now, responsible growth also shows how we make an impact in communities where we live and work. In 2021, we continue our long record with $375 million in charitable giving. Our teammates reported 1.6 million volunteer hours during the year. We also continue to be a lender and support our small businesses and entrepreneurs in our communities. We provide more than $2 billion to CDFIs to finance affordable housing, community facilities, and small business. We have invested in the common equity of dozens of minority deposit institutions and have $100 million plus of deposits with those institutions. We've also committed in a unique program $350 million to over 100 private equity funds that are run by women and minority entrepreneurs as private equity partners and invest in companies with like owners. Responsible growth requires us to work with clients of every size and every sector to support a just transition to a sustainable future for the energy security for the United States and around the world. We believe that capitalism remains the best way to tackle the big challenges facing society. We all face a transition to a secure energy environment. The private sector has the funding, the scale, the long-term thinking to help with its toughest issues, including those. In 2021, we had $250 billion in loans and other support to clients in the area of sustainable finance. This includes more than $150 billion focused on a clean energy transition. We work with all companies in the energy sectors, oil and gas clients, who are also investing to help drive clean energy solutions. Responsible growth also means delivering for our shareholders. We delivered strong profitability and returned billions of dollars to shareholders in dividends and stock repurchases. But our balance sheet, capital, and liquidity are the strongest in our company's history. This is responsible growth. This is capitalism in action. Thank you, and we look forward to your questions.
Thank you, Mr. Monahan. Next, we will go to Mr. Rogers. You are now recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, and members of the committee, good morning. I'm Bill Rogers. I'm the Chairman and CEO of Truist. I'm extremely proud to be here on behalf of Truist's 50,000 purpose-driven teammates, and thank you for this opportunity to testify today. Truist is a purpose-driven company, and that purpose is to inspire and build better lives in communities. This drives our mission for our teammates, our clients, and the many communities and stakeholders that we serve. For teammates, our mission is to create an inclusive and energizing environment that empowers teammates to learn, grow, and have meaningful careers. Truist's minimum starting pay of $22 per hour is among the highest in the industry. Our career development programs provide a pathway to professional growth. They include offerings at the Truist Leadership Institute, as well as tuition reimbursement for education that supports career advancement. We've also accelerated career development for Truist leaders from diverse backgrounds, which has helped us meet our goal of 15% diverse representation in leadership roles a year ahead of our original target date. To help ensure our teammates' financial security extends into retirement, we offer eligible teammates both a defined benefit pension plan and a 401k match at perhaps the highest level in the industry. For our clients, our mission is to provide distinctive, secure, and successful client experiences through touch and technology. We recently launched Truist One Banking, which includes 2 new deposit accounts with no overdraft fees, as well as other features to accelerate our clients' journey towards financial well-being. Today, 87% of our client interactions occur digitally. We're evolving our products and services to help ensure we continue to offer a best-in-class client experience that's intuitive, efficient, and secure. Client security is a Truist priority, and my written testimony outlines actions we are taking to protect our clients. We welcome opportunities to work more closely with law enforcement and policymakers at every level to help protect our banking system from organized and sophisticated criminal attacks. Even when most client interactions occur digitally, exceptional client service also often requires the personal touch that our Truist teammates provide. Personal touch made the difference for many of our clients navigating the PPP process. At the outset of the pandemic and in the middle of our merger, thousands of our teammates worked directly with their business clients to meet their fast-changing financial needs. I'm extremely proud and appreciative of the client letters we received, thanking our teammates for their help in securing PPP loans that kept their small businesses open and their employees employed. For the many other stakeholders we serve, our mission is to optimize long-term value through safe, sound, and ethical practices. Truist is a Main Street bank, and teammates serve our clients at more than 2,000 branches in 17 states and Washington, D.C. We're committed to being a good neighbor and contributing back to the communities where we do business. In 2019, we committed to a $60 billion community benefits plan, which included mortgage lending for low and middle income borrowers, commitments to small businesses and community development lending, community development grants, as well as the establishment of 15 new branches in LMI communities. I'm pleased to report that through August of 2022, we estimate that our combined lending, investing, and philanthropic financing activities already exceeded the $60 billion mark, and that we'll open 16 new branches in LMI or majority minority communities by the end of this year. In addition, Truist has been a strong supporter of MDIs and CDFIs. In 2020, a $40 million Truist donation helped establish Corner Square, a new nonprofit that provides capital to racially and ethnically diverse small business owners. In 2021, Truist committed $50 million to serve as an anchor investor, along with Microsoft, on FDIC's mission-driven institution investment fund. And in June, Truist committed an additional $120 million to strengthen and support small businesses with a focus on Black, Latina, and women-owned businesses. I'm inspired by this opportunity to lead this purpose-driven company and serve our clients and our teammates in our communities. Thank you for this opportunity to share our purpose journey with you, and I look forward to your questions today.
Thank you, Mr. Rogers. Next, we will go to Mr. Sharp. You are now recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, and members of the committee, good morning, and thank you for the opportunity to be here today. Since October of 2019, I've had the privilege of leading Wells Fargo. As I reflect on my time at the company, I'm incredibly proud of how we've used our strength during difficult times to support our customers, employees, and communities we serve, while we've worked to transform the company at the same time. I believe that our nation benefits from a strong Wells Fargo, and that has never been more true than today. The last time I appeared before this committee, the country was in the middle of a pandemic, and my testimony and many of your questions were focused on what banks were doing to support the communities in which we operate. Those were important questions then, and they're equally important today, given the complexity of today's high inflationary environment. Since 2020, Wells has provided billions of dollars in emergency lending to America's small businesses, and we donated approximately $420 million in fees from that lending to small business owners who struggled during the pandemic through our Open for Business Fund. These funds are estimated to have reached more than 150,000 business owners nationally and preserve approximately 250,000 jobs. Last year alone, we helped more than 500,000 homeowners with new low-rate loans to purchase a home or refinance an existing mortgage, and we closed billions of dollars in new commitments in affordable housing. Between 2017 and 2021, we increased average wages for our U.S. hourly employees by nearly 25% and increased investments in our U.S. employee benefits by over 20%. And we launched a unique special purpose credit program committing $150 million to help eligible Black homeowners lower their interest rates and reduce their monthly payments. In addition, we issued a second sustainability bond in the amount of $2 billion that will finance projects and programs supporting housing affordability, economic opportunity, renewable energy, and clean transportation. Our work is bolstered by our Banking Inclusion Initiative, a 10-year program to help unbanked individuals gain access to affordable, mainstream, digitally enabled accounts. Though our work is not complete, Wells Fargo approaches issues differently and is a better company than when I arrived. We have driven a tremendous amount of change and established a much stronger foundation for the long term with a clear sense of urgency on building our risk and control infrastructure. We have changed our operating structure, simplified our business, and have a new leadership team in place with the necessary skills and experience to transform Wells Fargo. Almost 70% of our company's operating committee is new to the company since I joined. Additionally, well over half of the senior-most people, meaning those who are one level below the operating committee, are new to their roles. We have also meaningfully improved diversity in our senior ranks. Additionally, last week we announced that we will commission an external third-party racial equity audit. The assessment will focus on elements of Wells Fargo's efforts to serve diverse communities and promote a diverse workforce. Commissioning this work is a critical next step in reinforcing our commitment to racial equity and helping close the wealth gap in this country. Looking forward, I recognize that the country may be facing uncertain economic times for months to come. I can assure you that Wells Fargo is keeping a close eye on consumer spending and credit trends, and we will continue to be a constructive partner in forging an inclusive recovery. We recognize that COVID-19 has left many people still in need, and the current inflationary environment has added stress. As a company, we will continue to provide support to our customers, employees, and communities over the long term. In conclusion, I want to express my sincere gratitude to everyone at Wells Fargo who has continued to serve our customers, each other, and our communities through these challenging times. I appreciate their dedication and resiliency as we have worked to make Wells Fargo better. While we still have much more to do, our foundation is stronger, our business is more focused, we are driving cultural changes, and the changes we have made to the company are making a positive impact. I'm confident that we have the management team in place to complete the work ahead. Thank you. Welcome your questions.
Thank you very much, Mr. Sharp. I now recognize myself for 5 minutes for questions. Mr. Sharp, I recognize that you have only been the CEO a little less than 3 years, and I remember the commitments that you have made, and I'm listening to what you consider has been your progress since you've been there. Your commitment was to clean up the culture of corruption that existed in Wells Fargo. Since you last testified, the OCC fined your bank $250 million for violating a previous consent order regarding risk management and for engaging in unsafe and unsound practices related to serious deficiencies in your home lending loss mitigation program. In May 2022, the New York Times reported that current and former employees of Wells Fargo described hiring practices that led to fake job interviews so that internal diversity goals could be achieved. 2021 report by the Committee for Better Banks found Wells Fargo failed to sufficiently disclose employment diversity data, making it impossible to examine advancement opportunities for workers of color. One Wells Fargo employee, Ted Laurel, who is a call center worker in San Antonio, Texas, responded to the last report saying, and I quote, "It's extremely deflating to be a person of color at Wells Fargo. In the past couple of years, I've watched a handful of black managers at Wells Fargo get fired or leave," quote unquote. Mr. Sharp, I know the bank has made various commitments to address the racial wealth gap, and you have finally agreed to do a racial equity audit. I also appreciate that Wells Fargo is one of the few banks that have maintained a presence in the Caribbean as a correspondent bank, while, of course, we had Citi who responded to us when we were in Barbados that they had closed their correspondent banking operations. And so I do appreciate. But it is not all clear that you're doing enough to finally break the pattern of repeat offenses. To take another example, a Bloomberg investigation found that Wells Fargo approved fewer than half of black homeowners who applied for mortgage refinancing in 2020, the worst black approval rate compared to other major lenders. I know you will point to things like FICO score, requirements of the GSEs, but this doesn't fully explain why your bank was comparatively worse in this mark compared to other major lenders. When you look at this track record and when you hear feedback like that from your own employees, what is your assessment of your performances since you last testified before us? And so, you gave us some indication, but would you respond to the fines and the criticisms at this point?
Chairwoman, first of all, thank you for the opportunity to address those things. I was brought in to bring about substantial change at Wells Fargo, and we have made tremendous changes. I've also been very clear since the day I arrived, including when I testified in front of this committee in March of 2020, that it was going to take multiple years to make all of the changes that were necessary so that the company was run in a way that I'd be proud of, our regulators would be proud of, and you'd be proud of. We've closed 4 consent orders since I've been there. We have returned our CRA rating to outstanding. We have plans in place for all of the remediation work that has to take place, and I firmly believe that we are making progress across that body of work. And as I said in my remarks, I'm very confident that we've got the team in place, but that we also have the processes, the discipline, and the sense of urgency to get done what is needed.
If I may interrupt you, will you respond to the accusation of fake interviews? What does that mean to you? And I think you've heard this criticism.
Congresswoman, no one should go through an interview without the belief that they could have a reasonable shot at getting that job. We firmly believe that having a policy in place that requires diverse candidates helps us attract the best candidate. We believe that that's in fact what the policies that we put in place is happening, and that's the reason why our diverse hiring is up substantially since we put these policies in place. And to the extent that anyone feels as if they've not been treated properly, that's something that's on our management team to ensure it doesn't happen.
Is it true that you interviewed African-American employee for a position after you had already hired a white employee? Is that true?
Chairwoman, we're in the middle of continuing an investigation to make sure that we understand every instance where people felt as if they were not treated fairly. And if we have findings, we will take the appropriate action.
Thank you very much. At this point in time, I will call on the gentleman from North Carolina, Mr. McHenry, who is the ranking member of the committee. You're now recognized for 5 minutes, Mr. McHenry.
Thank you for your testimony. Let's talk about the main thing. The main thing here is the economy, the state of the economy. We see a changing rate environment that has a severe impact on financial institutions and families. We see it first with the housing market, 7 months of receding home sales and in a time where we need more housing units in America. We see inflation eroding families' budgets on a weekly, monthly basis, made worse by policies out of Washington. So let's talk about inflation. I want to know the impact as you see it. Ms. Fraser, you have a global footprint. You're in jurisdictions that have rampant, persistent inflation. There's huge pressures placed on consumers and businesses in that environment. What are those economic consequences and challenges of a high inflation environment?
Thank you very much for the question, Congressman. We are very concerned about the high prices that consumers are facing in America and indeed around the world. We certainly have lived through very unusual times through the pandemic, through the recovery from that, and then the impact greatly exacerbated by the war in Ukraine. So the impact of the higher rates that are required to try and tame the inflation is likely to be moderating growth in America and around the world, and will be putting pressure on many of the drivers of the recovery that we've been looking for.